Welcome back, everyone. Still the same old thing. Let me test on the audio and the screen. And it seems like both channels work perfectly. And yeah, and we shall wait for a little bit for the others to get in, then we will get started on today's sessions. And today we will talk about the zero cost investing, which is not about the principle, it's about the tools that you use. Because many people that use some tools that need to pay for certain fees to make use of the function. But for me personally, I didn't just purchase any of the services. I just used for my own the free resources and to make it happen, to make my research and then to make money. And yeah, let's look at Go for today. Actually, today Go do have a very beautiful setup here. So this is what I usually will do. It's because when it come back to retest on this is what we call some kind of the very important level. And when it just standing firm on here and then it come back to have the retest and yeah, just flip of the candle and this become a very beautiful trend. But at that timing, I have something on my hand, so I couldn't just uh, make it happen to enter the trades. So quite a waste for this opportunity. Meanwhile, yeah, let's check on today's chart. So actually from today's chart itself, you can see that when it climb up, and then finally it come back to retest on this level, you will see that even though here there's a green candle forming, and you might think that it is already a support for me. And if you get in here, then you are in a very troublesome position where you might end up losing your money by getting hit on of the stop loss. So why I didn't just get in here is because if you just check on the 4 hours candle, this is actually at the very high position of that candle itself. But when you're comparing to this one, this is actually a new 4 hours candle. So the new 4 hour candle actually start on 5 p.m. Malaysia time. So this is where the new 4 p.m. candles, a new 4 hours candle is forming. So when the new candle is forming, it means that there will be more momentum and volume to push it up. So if you are going to buy here, then this is actually not a very good place because actually you are going to buy at the 4 hour candle top. So we always do a buy low and sell high, and we didn't buy at the high. Meanwhile, if you are going to trade for this chance instead, then this is actually not a very high when comparing to a 1 hour candle and also a 4 hour candle. But it's still a very high position if you compare to the daily chart. But actually today's chart has gone crazy. So as you can see, today chart, the movement itself already surpassed the last two candles. So I believe that this is because of the trade war is going to happen. And China just announced that they will have a tariff raised to 83%, if I'm not mistaken. And we shall see how it goes. So if you do work in a China company or a American company, some of the manufacturers already stop their productions because they don't even know how to make the pricing. So when the pricing is becoming uncertainties, it will be very crucial for a business to run. So yeah, so now it might be a very difficult timing for those manufacturers, those productions, So yeah, we will see how it goes. And I don't know since yesterday we already talked about the tariff, so I believe that every one of you might know that what is a tariff. So the tariff now is becoming a war in between just America and China. Meanwhile, the other country all remain neutral and compromise to the American. And this is actually not a good sign for the other country, because it will just keep on strengthening the US dominant force in the global market, and the other country GDP might drop due to that, because the money in the whole global is limited on certain amount. So if the US is making money, then somehow the other place are losing money. So this is how it works. So the cash flow just flowing around, and then if there's no updates, or what we call latest information on the printings, the money printings, then I believe that this is what is going to happen. The other country, including Singapore, Malaysia, then our economic will still going to be weakened. And if you do have some stock on hand, there's some things that you can do. Either you can cut your positions, or you can just buy a put for insurance purposes. So even though it dropped, you can just hedge your positions, and then you can just protect your profit or your money. So you can either cut losses earlier, or you can buy a put as an insurance to your positions, or you can just keep on doing a cover call options. So what we call a cover call option is that you try to just sell a call options at a relative higher price compared to your entry price. Then you will just keep on receiving the premium until one day it really come back to your positions and make it happen for you to exit your plan. So this is my little advice to you guys. If you didn't able to make it success to escape at a higher price. So let's get started on today's sections. So on today's sections, we need to talk about the tools that I've been using all the time. So actually, what I've been using, first of all, of course, is TradingView for the chart analysis, for the technical analysis. So this is the website, tradingview.com, and this is a free version, even though you cannot just the maximum monitor that you can split is 2, but I believe this is already sufficient for you to do your trading, since we are not a very high frequency active traders, so 2 monitor is more than enough for us to do our tasks. After that, if you are going to trade for a stock, actually I will be paying attention on QQQ instead. So on this day, which is February 24, it have been closing below the recent support and make it a shift of structure to a downtrend. And unlike what happened previously, when this happened, this is the previous support, and it didn't make it a close below. And yet it did close below here, but it did come back afterwards and able to break the high again. So this is what we consider a fake break. Since it break this one, break here, and then this one break this high afterwards. So this is what we consider a fake break. And then what happened here is that once it closed below the support, it didn't come back anyhow. So on this day onwards, the market already having a sweep of structure, and I've been picking up a lot of stock in the short positions. So I have been picking up a lot of put options on that day, but now most of them already closed with a very good profit, and it's still dropping, and there's no sign of reversal anyhow, and we shall see where will it be dropping until. So the first thing that you need to pay attention to is the macroeconomic, and this is how you judge on the overall trend. Once you already identified either the market is in bull trend or a bad trend, then you can go to your desired stock. You can just go to filter all the desires, all the stock that you are looking for. If you are going to just do a long positions or buying a call options when it is in a bearish market, your winning percentage will become very low. So we try not to against the trend. We want to try to be friend with the trend and then to just profit along with it. So this is also what the others very great men in the history state, like Warren Buffett or Jesse Livermore, all of them are talking about trade with the trend. Okay, so this is how it is. Now it's still a downtrend, and we shall see when the downtrend will be ending. And personally, I think that a downtrend, even though you look at the weekly chart, is also a very bearish trend. And let's see on the recent support, which is around here. When it drops to this level, then you can pay attention to the smaller time frame. Either there is a shift of structure on the overall. Then, if there is a shift of structure, then you may take actions to just picking up your desired stock. But somehow, I believe that if this is really a very strong bearish movement due to the whole macroeconomic things, then the war is going to continue for much more longer. Just like last time when there's a huge raise in the tariff, and the bear market has been continuous for 3 years, which is the longest bear trend in the history. Normally, a bear trend, a bearish market, will only last for around 1 year to 1.5 years. So it starts on February 24. So the best scenario might be it's going to end for next year, February or March. But if things really turn that badly, then we shall be prepared for ourselves for a 3 years of bearish market. But this is what you can do. One, it is even though it's 3-year bearish trend, but normally what it will do is it will drop very sharply, and then afterward it will just consolidate at the bottom. So a consolidation, when the consolidation happen, there is where you can get into your positions, and then afterward you can just wait for another bull market to come. Then you'll become financial freedom. A very simple 5 years plan for you to achieve a financial freedom. So this is also what I'm doing. I'm actually saving a lot of bullets, which is money, to wait until there's a consolidation form. Okay, let's get back to it. So nowadays, we will talk about fundamental analysis, technical analysis, macroeconomic analysis, and this is what we all do. And what happened is, when we are talking about the macroeconomic things, we need to pay attention to the news. And this is some of the very reliable news sources that you can pay attention to. Investing.com, Jin Tan for the numbers, for the figures, investing.com for the news of the particular stock, and also this one, 智通财经, if you do know about Mandarin. Then afterward, what I will see actually is also utilize of this website is what we call a FinViz. This one, FinViz, okay? there's a lot of very powerful function here. First of all, is the map. So this map will just tell you at the first second that you take a look at it. So everything is in red. The market is in very weak situations. And you can see that even though all of the industry, majority of them are in losing strike, is in a very strong bearish movement, you can see that this industry, aerospace and defense, is strengthening. This is how you find the outliers of among every of the industry. So if you don't want if you already miss what we call missed opportunity to just short at a very higher position, then this is the industry that you can pay attention to, which actually makes sense because they're afraid that the whole tariff thing will make the war happen in between the country. So they're trying to just boost this particular industry a little bit stronger, the aerospace and defense. Afterwards, if you take a look at the healthcare is also performing very nicely when you're comparing to the others. So these two is what you can pay attention to. Meanwhile, if there's something like this happen, I won't recommend you to take a look at it because this is a 50-50 to me. So I'm not sure what direction that it will goes to. But these two is definitely what you can pay attention to. Meanwhile, actually you can adjust to see the performance in different time frame. Meanwhile, this is a 1 day performance. You can actually take a look at 1 month or 1 week. This is what I will usually do. When I'm going to get into a trade, invest or trading, and first I identify what's the how long am I going to hold for the trades. If I'm going to hold the trades for like weeks until months, then 1 month performance is good for my analysis. If I'm going to hold for longer, months until years, then you might need to take a look at the quarter result instead. So this is what you can take a look at. And you can just filter the map with either S&P 500, the world, you can see? It's even include the China stock, the Japan stock, Taiwan stock. But unfortunately, there's no Bursa here. Yeah, no Malaysia stock and also no Singapore stock. But yeah, you can just take a look at the overall global market instead. And this is totally free. Why is there so many? Yeah. Afterwards, this is the ETF that you can pay attention to if you don't feel like want to buy for a specific stock. So actually, ETF is also quite a good alternative solution for you. And you can see the market is all in red, and what is in green is actually the inverse because the market is dropping. And when the market is dropping, the inverse ETF will go in profit. It's an inverse relationship with the market. And then this one, you can also take a look at it. This is a bearish semiconductors ETF, and this is also in profit. Meanwhile, the other is all in red. The only thing is in green is you can see that the last sentence here, the bear 3x share. So yeah, this is how you can just understand the whole market with one glance. Okay. Afterwards, let me introduce you the group function here. Just different illustration purposes. So yeah, this is how you can do your things. And afterwards, if you are interested on one particular stock, this is what you can do. Personally, I only trade for a very large capital stock. And then afterwards, regarding on the fundamental side and fundamental analysis, you can just take a look at the valuations that provided by the global financial analysts or the institutions. And you can see that this stock, Apple, now the share price is 172. And you can see the valuation that given by the others is ranging around 170 to 280, which is higher when comparing to the current price. And this is what it means is that the market is still thinking that this stock is now dropping below the valuation price, and there's a potential for it to come back to the range. And this is the action that have been done. They have been downgrading their ratings on this particular stock. So when they are downgrading, which means that they're feeling desperate, they're feeling disappointment on this particular stock. But somehow the valuation provided by them is still higher comparing to the current price. So what I'm thinking is, since the market is in a downtrend, a very obvious downtrend, so how you can just make use of this information is that if there is a dead cat rebounds, the rebounds, jump again up and then just shooting up, and then when it hits the middle in between this zone, there is where you can start to look for an opportunity to buy a put, or you can just go to the futures and make a short, and then you can just ride on the bearish rally. This is how you do. You're not going to buy it here because buying is an action that against the current market trends. Now it is in a bearish trending, so you can never buy low because there's still you can never guess where's the bottom. A lower price can still go lower and lower and lower again. So this is what you can do when there is a retracement, there's a rebound. This is the pricing that you need to pay attention to get into your short position instead. Okay, so this is the valuation, and this is very useful for fundamental analysis. Okay, let's see on how about the other apps. Personally, I was still using the investing.com, and then here you can just select the capitals, the market cap of the stock as a filter. Afterwards, you can check on the number of the analysts. Let me switch to English instead. So this is the same page as what I showed just now. Aside from just checking on the valuation from WinFits, you can also check the valuation from investing.com. So let it to just, seems like the web page is not responding. Yep, here it is. Cash flow, market cap, insights. Yeah, okay. So this is where you can take a look at. So this is like, let me interpret it for you. Like the first one is Microsoft, and then this is what you need to take a look at. which is the analyst recommend, and also the analyst target upside. So you can see that, let's see, the analyst recommend is in between 1 to 5. 1 is a strong buy, meanwhile 5 is a significant sell. So the larger the number, the weaker it is. So when the number is close to 1, it means that the market analysts are having a very optimistic opinion on it. They think that Microsoft is a very good stock to hold. And then based on the valuation, even though you cannot check the valuation value, but it provides you the potential upside until the valuation, which means that comparing to the current price, like Apple is 172 just now when we check. So it can still go up for like around 37% to hit the valuation range. So this is where you can take a look at it. Meanwhile, you can see that there's something like this happen, like the Berkshire Hathaway AMB. When it is very close to the valuation price, you can see that there's no upside or there's no very large number on the upside or the downside. So nowadays, when everything is dropping sharply, most of the stock are under valuations. When it's undervalued, then this is all the upside that you can take a look at. And if you really want to just buy a specific stock that can just bounce up, spike up among the market, then maybe you can look for something like this, a larger number instead. So comparing to the WinWits just now, WinWits allow you to check for one by one. Meanwhile, you can just take a look at Morgan Stanley is giving a valuation of 220, and then the other Everscore is giving what pricing, and TD Cowen is giving what pricing, Goldman are giving what pricing. This is what we call a detailed valuations. And then this one is kind of like a valuation screener when you're comparing to just one. So when you compare it to the previous one, if you really want to just filter between these things, find the diamond in the market, this is where you can just take a look at it. So personally, I'll be very interested on something that having a very huge potential room to the upside. So if the market is going to bounce, Broadcom and Taiwan Semiconductor might be the one that having the most potential upside force. Okay. So this tool is for the valuation, which is for the fundamental analysis. Next, let's take a look at what else. Yeah, this tool is also quite a good app for you to trade with. Aside from stock, when I'm going to trade for futures or options, what I need is a very relatively high trading volume to ensure that my entry and exit without any problem. I need liquidity, I need money. So I need a very high trading volume. So when I'm filtering that things, I can actually I will look for the Seeking Alpha and also the Finance Yahoo. So in the Seeking Alpha here, you can actually see that what is the top yielding stock, what is the top gainer and loser, the hot themes. So this is what the other is looking at, and this will having a very high traffic in the trading volume. Other than that, if you want to play safe, then you can go for the ETF, and then this is the trending dividend stock. You can find anything here that you like, dividends, ETFs, stock, index, and also the hot topics. So this will just summarize everything. And then this is the trending and the most active stock, which is what I'm looking into sometimes. Oh, PFE. I believe that PFE will having a very strong bounce back because not really actually, because PFE itself having a very high dependency on China manufacturers. Yeah. And yeah, so this is where you can take a look at what is the most active and the trending. What we mean by trending is that this is in the hot topic. So you can see the people chatting around this kind of stock in either Twitter or in the social media, Reddit, Twitters, somewhere else. And this is based on news. You can see based on news, and this is what the stock that is having a high discussion rate based on the news. But having a very famous news recently, hot news, Atlantic. We do call for Atlantic short. Let's see how it goes. Yep, did you see the blue line here? This is where we get into our positions. So when it break this high and it come back, this is where we get into our short position. And yeah, we are making money, but I do quit my positions here when it just come back to this, what we call an accumulated zone, also the previous low. I do take huge positions profit here and leaving some of them to running. So yeah, a very short trade, but giving me a very good profit. So yeah, this is how it is. And also, when I'm going to trade for a very short term, I want excitement. Sometimes I want to gamble in the market. I will also take a look at the earnings calendar. Because whenever there is an earning release, the price will react. One of the very significant example is Tesla. When there's an earning release going to happen, I get into the trade before the earning release. Why? It's because all of these things already priced in all the news and all the dreams and all the things. So I do not believe that the actual result will be better when comparing to what they are dreaming for, what they are forecasting for. I only believe that the result, either it will be a very normal result, what we call average performance, or it will be a very bad result. But either way, once it didn't giving us very surprising amount, it will just causing the price to go back to where it should be, go back to the valuations. Okay, so beforehand, we are already calling for short position here. If I'm not mistaken, yeah, in this like January 22, you call for a short position here. And then afterwards, we are having a very good downtrend, which I have closed my position here. Very obvious, this uptrend, and that is the accumulated zone. And when it come back, hit this level, I exit off my puts position. Beautiful. Okay, so now it just bounced back, and then there is a second test happen here. What you can do is, since we believe that the market is still in the downtrend, let's see on where is the next support. Too far away. So the next support, I believe, will be this one. Touching twice, then the next one might be here. So what you can do is, if this support didn't stand still, it break and close below, then you might get into a short position to take it ready until 183, somewhere like that. So there's still no sign of reversal at all. So this is what you can do. Yeah, so go back to the earnings and you can just take a screenshot or whatever. Make your note down. Market watch. This is where you can check all the earnings, like the earning for today, earning for tomorrow, yesterday, or even previous week. And you can see all the numbers here. The best thing about this app is that it includes literally every stock, even though those stocks that have a very tiny market capital. So this is what we call a short-term catalyst. So aside from the news, when there's innovations or there's a launching of new product, that is also a short-term catalyst. But aside from that, you can also take a look at the earnings calendar. That is also another catalyst. And for the valuation, you can take a look at the stock screener in investing.com to compare every stock. And also, if you want to take a deep look into one particular stock, you can go to FinViz. Meanwhile, in FinViz, you can also take a look at the overall performance. And when for me, myself, when I'm going to start, the first thing first is I want to check the overall market performance and also the global performance. I will go to FinViz first and then go to the map to check the performance. Then I will just select on the group to filter out which one drop the most or which one rise the most. So we want to do a buy low sell high. Is it buy low sell high things? So when the thing is in ridiculously red, there is where you can find your buy low position. But if it did spike up a lot, is in the top green, then you can just do a sell high instead. We want to do the reverse actions when comparing to the market peers, the retail investor. When it is in red, go for buy positions because you are buying low. But do check on the overall market performance first. So what happened is that previously in a bull trend, I will check for either the market is in bull trend. If it is in a bull trend, then I will go to the group and I will select those that have been retracing a lot. So if this is bull trend, I will select the red. If this is bear trend, I will select the green to go for sell high. But there's no green here that you can see. So wait until there is a green, until the rebounds happen. And the price that you can pay attention to will be the valuation's value. So this is all for today's, and I hope you guys enjoy for today's sections. Yeah, another thing is that if actually you can still use AI for the analysis, but personally I would recommend you to use Perplexity instead of ChatGPT or DeepSeek, because ChatGPT and DeepSeek have a delay in the informations and thing. Since we are talking about a free cost investing, so we have to go for a free version of the AI tools. So among all the free versions, Perplexity is the best one among all of them. You can select the sources, either is from social media, from news, either from a research paper. You can just do the filtering. So Perplexity, the best in stock filtering. Okay, that's all for today. If there's no more question from you guys, then we will end for today's sections. Okay, thank you all for joining. Hope you guys enjoy for today's sections and wish you all have a very beautiful night. Thank you.